Hey everybody, John King with Summit Funding. Thank you for joining me for my live stream today. I have a studio set up in my basement and I tore it apart for Thanksgiving because it's also right next to my pool table, and so I haven't put it back together. So you get a glimpse into my home office today instead of my green screen with my nice studio and lighting and all that stuff. So this is going to be a short 10 or 15 minute, really important topic because there's so many things that are changing right now in the housing market. I actually did about a 10-minute video that is my market update that I talked a lot today. It'll be released this afternoon, but I talked a lot today about the missing middle. And I'll just put that out there as a teaser. Watch my video on my YouTube channel. It's going to be released before the end of the day talking about the missing middle. This is part of it. This is kind of a side leg of that. And really, it's about affordability. Rates are super high. House prices have gone up super high. And that means that monthly payments are high and people just can't afford to get into a home. And the government is trying to find a way to fix it. And, depending upon what your thoughts are, they may make things better. They may make things worse, but we've got to find solutions because I talk to people every single day who just cannot afford to buy a house today. They can't afford the down payment. They can't afford the monthly payment. They have no idea how they're going to get into a home. And I want to show you some ways that we can make that work. So I really want to dive in today and give you a real good breakdown of what that's going to look like. And one of the scenarios that I really want to start talking about, and forgive me because I'm trying to fix a problem here with one thing really quick, which is, I'm going to show you some numbers in a couple minutes, and I realize they're goofed up. All right, that should be better. So one of the areas that I think we're missing, that a lot of people don't pay attention to, mobile homes in a park. Mobile homes in a park are a great option to help people such as yourselves, such as your clients if you're a realtor, get into a home with a significantly lower monthly payment and still get into a very nice home. Mobile homes have come a long way from our mom and dad's mobile homes. These things are beautiful. They are spacious. They have a lot of amenities and features. And obviously, it depends on the age of the mobile home and how it's been kept up. But there's some gorgeous mobile homes. And we now have financing options to help people finance a mobile home. And so I just want to give you a brief overview of what that looks like, wet your whistle a little bit, and see if this is something that might work for you or someone that you care about. So first of all, mobile home financing, let's go through some of the good news and some of the bad news about it. The good news, much lower price, like much lower price. I ran just some basic, like 1,700 square foot, 3-bedroom, 2-bath homes in the Central Valley, Lodi area. You're looking at, 400,000 plus for a starter home. That's $400,000 for a starter home versus you could find a mobile home in a park for $150,000 to $200,000 for a very beautiful 3-bedroom, 2-bath mobile home in a park. Now you have to remember though, there's some negatives that come along with it, and I'm going to cover the pros and I'm going to cover the cons and let you decide. But the first piece of really good news is much lower prices than what you're looking at for a traditional single-family home. Another piece of good news, we have low down payment options. We can do as little as 5% down plus closing costs. A lot of people think, John, I can't buy a mobile home. I can't buy anything because I don't have money for a down payment. Remember, you're putting 5% down on $150,000 or $200,000. So you're talking about maybe $10,000 plus closing costs, and the closing costs are cheaper on mobile homes. So you have a lot more flexibility to make something work. And the best part is we can use 100% of the down payment can come as a gift. So if you have a family member that's willing to help you out, instead of needing $30,000 or $40,000 to buy a $400,000 home, you might only need 10 or 15 grand in total, and you can get that money as a gift from a family member. Another benefit, low credit score requirements. As a matter of fact, we can go lower with 5% down. I can go to a 550 credit score on a manufactured home in a park. Now there's rules about your credit and what your credit history looks like. Was there a bankruptcy? We need 4 years after bankruptcy, 5 years after a foreclosure. So there's lots of rules. Just because you have a 550 credit score doesn't mean you qualify, but it means you're not disqualified. And that's a big thing because with a lot of home programs right now, you're disqualified if you aren't at least a 600 or a 620 So this gives us a lot more flexibility at the lower end of the credit score band. Now, some bad news. Maximum of a 25-year term. Now, I don't know if that's so bad a news because you're paying it off faster. You're actually paying less interest dollars because you're paying it off in a shorter amount of time. So it's actually benefiting you. More of your payment goes towards principal every month because you're paying it off in a 25-year term instead of in a 30-year term. The other thing to think about is that you don't have any down payment assistance options. So you're not in a position, you're not getting big seller credits from the seller to pay for everything. If you buy a $400,000 single family home, I can get you in for $1,000 because I can have down payment assistance that will pay for the down payment. And then I have the seller pay for closing costs. So I can get you in for $1,000. With manufactured home in a park, I can't. So you need to have some skin in the game, whether it's your money or money from a gift from family members. I think that it's a great opportunity, though, to get into a home. Here's the other thing. You've got to pay space rent. So if you look online and you see, oh my God, I see a manufactured home and this one's for $100,000 and the payment says I only have to pay X amount per month. Well, first of all, those online calculators don't always calculate taxes and insurance. They almost never calculate the payment for the rent on the space. And the rent goes up over time. So you are renting the space, but you're owning the home, and that is an asset that will appreciate that you get to sell later. Now, I don't think manufactured homes in general don't appreciate as quickly, especially in a changing market. So it's kind of single family homes are the ideal, the most common. Let's see, I got a quick comment here. Liliana says, what about manufactured home owned on land? Absolutely. That is another option. Manufactured home owned on land. I have loans for that. We can do regular financing on that as long as it is secured to a foundation and is recorded on with the county as real estate. I can treat manufactured homes on land like a regular FHA conventional loan. So lots of options there. Some down payment assistance options on manufactured homes on land. So definitely can do that. Thank you for that question. But just don't forget about the fact that if you are buying in a park, you do have to pay the space rent, and you got to make sure you're including that in your monthly payment budget. All right, here's another challenge. You're paying a lot higher interest rates. So these are higher risk loans. You're paying a higher interest rate, but you're not paying any mortgage insurance. And so you're actually saving money because the high rate is assuming that you have to pay the mortgage. Basically, you're financing the risk of a small down payment. Now, it's also the fact that it's a manufactured home in a park that's a higher risk. Lots of factors there. By the way, I got distracted with Liliana's question. I was talking about the hierarchy of homes. So let me go back to that. You have value. I'm talking about value of these homes. So let me get rid of this slide and let me just talk about this. I'll pull up this slide. Manufactured homes in a park. So there's a hierarchy that I look at that says the most desirable place for someone to live is a single family home. It's kind of the American way, which kind of caused part of the challenge that we're dealing with right now, but it is the American way. And so that if you had a choice of living in a single family home where you own the land, it's a stick-built home, versus a condo or a multifamily property or a manufactured home on land that you own or a manufactured home in a park, every person in most cases is going to say, well, gosh, for all this, if everything else is equal, I'd prefer the single family home. So that's the highest, most desirable home. It's going to maintain its value the best. It's going to go up the fastest. It's going to come down the slowest. Okay. On the other end of that spectrum, we start getting into multi-unit properties, condominiums, manufactured homes on land that you own. And at the end of that whole spectrum is manufactured homes in a park. In my view, they are at the lower end of the desirability range. But guess what? With the lack of inventory right now, people don't have a lot of choices. With the high prices right now, people don't have a lot of choices. And so the low end of the desirability range is in a high demand. It just in general is going to go up in value slower and come down in value a little bit faster than the opposite end, which is the traditional stick-built single-family homes. So I hope that makes sense. All right. So I want to look at an example, and I want to kind of show you an idea of what we're talking about. And so if you were to buy, again, an 1,800 square foot home, a single-family home, for 3-bedroom, 2-bath in Lodi. I found one online that is $189,000 home. So this $189,000 home, you are putting 5% down. So you're borrowing $180,000. You're putting $9,450 down, and you're paying about $4,000, $4,500 in closing costs. So your total cash is about $13,800 out of pocket. Your payment is about $2,550, including the space rent of about $700 a month. Now, again, space rent's going to depend on every unit being different. So you're coming up with only $13,000, $14,000, and you have a $2,550 a month payment on a beautiful home that is in a park versus a $400,000 starter home. A $400,000 starter home, you're looking at, this is using FHA, you're looking at your down payment being literally 3.5% of that. So you're looking at about $14,000 in down payment. And then you got closing costs, which is about another 15 grand. So you've got $29,000 of cash to close. Now you can get down payment assistance to help with that, but that's going to make your payment even higher. You can get seller credits to help with that, but that means you're going to have to buy the house at a higher price. So just using this as an equal comparison, your monthly payment is $830 a month higher for the single family home at $400,000 compared with the mobile home in a park at $189,000 plus space rent. Now I want you to understand, apples to apples, this is much, much more affordable, and it is not your permanent situation. You do not have to stay in this mobile home forever. You can use it as the springboard. You can use it to sell this property down the road, take the equity out of it, and buy the next home. It's called a housing ladder. And it says you start at the bottom rung of the ladder, not with your perfect home, not with your dream home, but with a home that fits your needs and is able to work for now, not forever. Maybe that means that you buy a home that you share with a family member. If you could buy this 3-bedroom, 2-bath, 1,800 square foot manufactured home and have a family member live there with you, now you're only paying $1,250 a month for each of you. You each get your own room and you split the other one as a home office. Lots of ways you can look at this, but this market is changing. This market is not going to get any cheaper. When interest rates come down, and they will, house prices are going to go up because there just aren't enough homes listed for sale. And so we've got to figure out, how do we solve this problem? Instead of saying, I want to wait till rates drop because if I do that, I can afford my home. Can you? Can you? You've got to look at other options. There are a lot of things that are changing right now. There are things that are changing when it comes to accessory dwelling units and tiny homes and additional units that are being put for housing that's going to start to solve our housing affordability crisis. But it's going to take some time for that to happen. And in the meantime, you have to decide, am I going to continue renting and allow my rent payment to keep going up and not do something about it? Or am I going to find a way to address this issue? Am I going to find a way to overcome the obstacle that's been staring at me in the face and saying, oh my gosh, I can't own a home, I can't own a home, I can't own a home? Or you make a decision that says, you know what, I'm going to look at this in a little bit different way. And I'm going to find something that is safe and suitable for my family, that provides everything that I need for now and gives me the stepping stone to build equity. You still get a tax write-off. You still get your forced savings account. As a matter of fact, as I said, you save more. You're paying more towards principal every month on this 25-year loan than you do on a 30-year loan. So you're getting more money in your equity built in the future every single payment that you make, because these loans are based on 25-year terms. It's actually a really good alternative. And that's one of the things I'm going to spend a lot more time in the future talking about. I'm still here to take care of your single family homes. I'm still here to take care of all of the stuff I've been doing so far. But we're adding this element because the truth is the problem's not going to solve itself. We need to find other ways to help you and to help your clients find a home that they can afford. Find a home that they can feel safe in, that they can raise their family in, that they can call their own and build wealth in that home. So if you're with me, please reach out. Let me know if you have any questions about this. If you like this information, please share it with everybody that you know. I'm trying to share and get people to subscribe to my channel to get the reach of the information I'm providing out as much as I possibly can. So guys, I really appreciate your time today. It doesn't look like there's any other questions. So I'm going to let everybody go. I hope you have an absolutely wonderful weekend. And if you don't know yet, Santa Claus is coming to Roseville next Saturday, the 9th of September from 11 to 2. Come by my office, meet me, come see Santa, get a free picture with Santa Claus, some food. We'll have fun. We'd love to see you at my Roseville office from 11 to 2 next Saturday, the 9th. Thanks, everybody. Have a great weekend.